Hi, everyone. Hi, everyone. Here we are live on our 19th weekly Ask Me Anything. Oh, I messed it up. I got to do, I'm doing it on TikTok too. Discard.
Called Adabine that you
Live.
let me get here.
No.
Utilizes machine learning.
Plus. Live. Join. I don't want to do subscription stars. What's that? Go live. Okay, so what's up, everyone? Hi guys. James Baker here, and I'm live on TikTok and Instagram and YouTube and Facebook, broadcasting all over the internet for my 19th weekly Ask Me Anything call. On this call, I'm going to be answering your questions about international taxes, US LLCs, filings, business development, and other things that you may need to may have questions about. And if you have questions and you're in one of the meetings, definitely ask. I love all the trolls in TikTok. They just show it to random people who ask really dumb questions, and I really appreciate that. What's up, Mark? There I go. Ask any questions. Happy to have you here. And but I have actual questions that I'm going to answer. I'm going to go over from clients and from people who've asked during the week. So I'm going to go through a number of these questions, and we are going to get into it a little bit. So thanks for being here, and let's see. This is a lot of cameras in my face. So here's the first question. I'll move it back over here. Hey James, I'm a non-US resident. I was the owner of a foreign-owned single-member disregarded LLC. I never used it, and I closed it 2 months ago. It was formed in 2020. The Form 5472 and Form 1120 have been filed every year. I received a letter from the IRS about Form 941. It says they're working on your account, and if you have a balance, you can still make payments to reduce your tax liability. So the question is, what is Form 941? Well, Form 941 is a quarterly payroll tax form. It's used when you have employees in the United States. It's not likely that you had employees in the United States if it's a disregarded foreign-owned LLC. It's very unlikely. So it's potentially someone filed it on your behalf. There's a lot of scams of people filing the 941s requesting refunds because there are credits associated with that. So so what happens is so what happens is you can get money back if you had employees during 2019 or 2020 and 2021 for the employee retention credit. And I've helped a lot of clients get credits and get money back. But for you wouldn't be filing a Form 941. When is Form 941 required to be filed? Generally, the Form 941 is only required if you have employees in the United States and you are paying and remitting payroll taxes. So if you're not paying payroll taxes and you don't have employees in the U.S., you wouldn't be filing Form 941. And yes, there's penalties for not filing the form, but it's generally not going to be required by any of you. It's not a common form, and even most Americans use payroll service providers like ADP or Gusto or something else in order to file these forms for them. So it's really strange that you've gotten this notice. I would probably reply to the notice and tell them, hey, I haven't filed any 941s and I have no employees in the U.S. Can you please send me a copy of what you have on file? And let me see, wait, and go from there, because it's not something that you should be filing, from what you've told me. Question 2, and I have no questions in the chat still. YouTube's the best experience. It's easier in the chat. The names of some of you guys on TikTok are amazing. Okay, so what's up, TikTok? What's up, everyone? I see you all here. I see some people on Instagram. This is fun. Hello, James. Here's question 2. Hello, James. Is there a difference if I, a foreign-owned LLC, will engage in government contracts, product-based, and the model is dropshipping? For example, I will supply office consumables to a federal office on a regular basis, and the product sources through dropshipping. So I don't. That's a good question. Sometimes I've heard. I don't know the answer to this, so I'm going to speculate. I've heard that government contracts, you need to have a U.S. corporation, oftentimes, or be a U.S. taxpayer to engage in government contracts. So you should try that. You should try and register for your company, and also if you need to, you can open a corporation. But the idea is that if you're not, it doesn't matter if you're not doing business in the United States and you have an LLC, you wouldn't have to pay taxes on it. So it's something that you should be paying taxes on, but you might need to be a corporation to register. What's up, TikTok viewers? Question from TikTok. Are you doing Donald Trump's taxes? No, I'm not. That's way too much work. Definitely. He did use a firm from New Jersey where I'm licensed. Here's a question. I have a Wyoming LLC. What do I need to do beyond the annual report? If you have an LLC and you're a foreign person and you have no U.S. trade or business, you have to file a Form 5472 to report related party transactions. And otherwise, if you have more than one owner, I want to pin this one. If you have more than one owner, you have to file a Form 1065 and file a partnership tax return to report that. So in either case, if you have no U.S. trade or business, you don't have to pay taxes in the U.S., but still you'll have to file a tax return in most cases. So it's definitely something to review. Hola, Mama Senia. Bueno. Here's a question from the Instagrams. If I owe a payment to someone outside of the U.S., can I deduct this from my tax return form? A loan payment is not an expense. So just like the loan, when you get a loan, it's not income. When you pay off the loan, it's not an expense. That's the best way to explain it. So getting a loan is not income, but then paying off the loan is not an expense. The interest you pay is an expense, but that's how that works. I have a question button. No questions yet. There's a question button too, also in Instagram. But that's the answer to that. It's a good question. If you owe a loan payment to someone outside the U.S., it's generally not a tax deduction. It's a repayment. Oh, here's a good one, Boss Baby. What was the hardest part of the CPA exam? FAR, Reg, Audit, or BEC? Ironically, Audit was the easiest because, and I did one audit. So the hardest was probably FAR. It's the most broad and it covers the most parts. Reg was also hard because of the legal components to it, all of the tort laws and all that stuff. I think FAR, though, I got a 75, just passed. I passed them all the first time. Consider myself lucky. I did study and work really hard on it, but FAR is definitely the hardest. Get it out of the way. Thanks for the question, Boss Baby. Good luck to you on the CPA exams. That's awesome. Here's another question from the TikToks. This is great. And thanks for the likes and everything, guys. I guess that attracts viewers. How much money can you make before reporting taxes in the U.S.? And I assume this is for a U.S. person. But generally, if you're self-employed, you have to file a tax return. If you have a job and you make less than $12,000, you don't have to file a return if you don't want to. But I would recommend filing because you probably get money back. So that's the answer to that question. Let's keep going through some of these. We have none in YouTube. Oh, I actually do have one on YouTube. Here's a YouTube question. I'm going to actually pin this one. Cool. With a foreign single-member LLC in Wyoming, if you have a U.S. natural person customers selling digital products and courses, do you have to pay taxes in the U.S.? So if you're a foreign person and you have a U.S. LLC and you're not in the U.S. and you live outside the U.S., if you can sell to Americans without having to pay taxes. The U.S. government cannot impose every single person in other countries who's selling stuff to Americans to pay income taxes in the U.S. because you're not an income tax resident. You have no U.S. trade or business. So that's something that I'm talking about constantly. In this example, it's a great question from the free man. If you are selling courses and all that to Americans, you don't have to pay taxes on the profits there. There are reporting things you have to do and all that, but you don't have to pay any taxes. If you have salespeople and if you have salespeople in the U.S., they just shouldn't be allowed to enter into contracts. That's something you want to be a little protected from that. But but in regards to like just in that general question, there would be no income tax owed just for having U.S. clients. Good question, though. Okay, so I'm going to go back to my questions. Hi, James. I have a question for you, for your. Uh, if I'm the owner of an LLC as non-residents disregarded entity, if I buy clothes, food, watches, lottery tickets with the LLC debit card, can I have problems with the IRS at some point? This is a fun question because for all you people who live in outside of the United States, who have U.S. LLCs, and you're using these to conduct business for whatever. At the end of the day, if you do it the right way, which we're learning on this channel how to do, and that's what we're all here to figure out, doing it the right way, keeping it in legal compliance. If you're doing it the right way, then you don't have to pay taxes in any situation. So the way you spend your money really doesn't matter. The IRS isn't going to audit you to reduce your expenses when you're not subject to tax anyways. So I don't think you'll have problems with the IRS at some point as long as you're doing everything right. You can spend your money on whatever you want. And when we do the accounting, we'll consider it a distribution. So that is a good question because that's what a lot of my clients do is they open an LLC just so that they can use the debit card as they're traveling and doing stuff all over the world. So so that's the answer to that question. Here's a question. So from my people in Spain, what's up, Hans? So for my people in Spain, there's a movement in Spain about people trying to use LLCs and lowering their taxes in Spain in different manners. And I'm going to probably answer this in Spanish as well. But in Spain, they pay a lot of taxes, and what's being taught in by some other people on the internets about how to lower your taxes in Spain is to open an LLC, have your money in there, and then just take the money out of the LLC by either buying NFTs or withdrawing the funds and just considering it as an expense for Spain tax purposes so that you have less income to report in Spain. Because if you have a foreign-owned single-member LLC, but you're a resident of Spain, you still have to pay tax on all of your results in Spain. So this question is, can I withdraw 70,000 of US dollars from ATMs in the United States and not consider it as a distribution? So you can consider that transaction however you want. I mean, like I said on the other question, if you withdraw 70K out and you call it an expense, the U.S. it's very unlikely you get audited by the U.S. And if they do, they're not going to change anything. You can do that for sure. It's going to be a lot of ATM fees. I'd probably just go to the bank and withdraw 70 at one time. I don't like having that much cash around, but if you want to do it at the end of the year and then deposit it next year into a different account or something, that's up to you. But to answer your question, you won't have problems with the IRS. No matter what you do, you really won't have problems with the IRS unless you are opening an office or spending a ton of time in the United States or doing other stuff in the US. So you wouldn't really have a problem. So I guess if that's one way to do it, if you want to do it that way. It's not it doesn't seem technically right from a number of different manners, but it's definitely a way you can do it if you want to. And for everyone here, I'm going to, there's 20 people here between the Redis, but I'm going to go in Spanish after this call. So stay tuned. I'm going to jump into answering questions only in Spanish for the last half of the call. So question 5. Oh, no, now it's question 6. And Danny, pull out some of the questions from for the recent questions from the Telegram group. If you guys haven't joined my Telegram group, it's a free group where we basically allocate a lot of the questions for these meetings. I answer some of them live. We're launching my private client group because I'm working with a lot of you guys already on the side, or as I'm already working with. I have a number of clients, so that group's coming out soon. I'll be announcing all that stuff, but. Join the Telegram group if you have questions and you can't act them or you're watching this later. Okay, next question. What can trigger a bank account closing your account? What can trigger a closed bank account? Let's see. Yeah, the question is, I really like knowing what could trigger a red flag in the bank accounts. How to avoid red flags in your bank account. That's a good one. That's a title for you, Danny. Share the link, Danny, in the YouTube. It's probably in the description of any other video. Okay, so I really like knowing what can trigger a red flag in the bank accounts. Sorry, I'm rambling. As you said, moving all money to crypto exchanges would be a reason for this. Hope you can tell more about triggers and actions that U.S. banks wouldn't like to see in our accounts. So how can I keep my U.S. bank account from getting closed? That's really the question, right? And the answer is to lower your risk threshold, because the banks have algorithms, banks and payment processors have algorithms that they use to determine what your risk is. Just like I can't tell you what videos on YouTube are going to rank the highest, I can't tell you what the bank's algorithms say in terms of closing accounts. But it's pretty obvious certain things are risk factors. Giant transactions are higher risk. If you're from a higher risk country, like some countries are just deemed higher risk. If you're from the US, opening a US account, you're generally lower risk than if you're from Iran. You know, nothing against Iranians. I have Iranian clients and everything. That's great. But like, you're just higher risk from US banking standpoint. So there's nothing like Pakistanis. I have a lot of Pakistani clients as well. And like, there's apparently high risk right now. So that's a big thing. It depends on where you're from, the type of transactions that you have, how many transactions you're going to have. And if you're if you just have $100,000 in the account every day and you wire it out right away, if you're treating it as a through account, that's higher risk. You know, generally you have to warm up an account. So I can talk a lot about the risks of banks. Payment processors are the same thing. You have to warm one up. You can't just open a payment processor with Stripe and just crush a bunch of $30,000 credit card charges and expect they won't ask you questions. They're going to ask you a lot of questions. However, you open a Stripe account, you can do $1,050 transactions and won't ask you anything because it's lower risk. The chargeback risk, it's just that's all. It's all a risk play. So that's a good question. Mr. Gift Trader, GFT Trader, my friend, asked the question. I'm going to decline invites, turn off the invites for this live. I'll leave it on. So if you guys have questions in the TikTok as well, let me know. Okay, here we go. La pregunta, I guess vamos a convertir a español. Para abrir una LLC, puedo utilizar la dirección de domicilio de un familiar. Si eso es común, usar una dirección a familiares para recibir sus cartas y al mismo sentido está requerido por muchos bancos. Entonces, muchos bancos quieren que tiene un domicilio, una dirección local en Estados Unidos. Entonces, eso no es un problema. Eso está muy bien y recomiendo eso. Question 7. Hi, everyone. Okay. This is a great question. And this is something from my good friend and colleague, Tony. Can a foreign company from another country have an office in the United States and hire American employees? This company works in the blockchain field. It doesn't really matter what they're doing. If this country doesn't have any kind of tax treaty with the United States. One goal of the company is to have expenses and having an office and employees in another country. The question is, why doesn't this company hire in its own country instead of having an office in the US? Because they need US employees. This is where the talent is, right? So the question is, can a foreign company from another country have an office in the US? And what happens if they do is the question. So the problem is this thing called permanent establishment. If you have a foreign company with an office in the United States, generally it's considered to have permanent establishment. And then that company is going to have to pay taxes in the US. And the rates are less favorable, and they have an extra tax on money that you take out. So if you, and I have to look up the name of this, it's a foreign corp dividend. It's called the it's no, I'm going to do foreign corp distributions of U.S. source income tax. It's called the dividend I'm losing my mind, guys. I'm gonna shut this down if I can't figure this out. I remember what this is called. Reduction of dividends. Whatever. I'm gonna go back to the original question because I can't figure out what it's called, and I'm losing you guys. So, if a foreign company is doing business in the U.S., all of the profits generated are subject to a corporate income tax, and they're subject to a 30% withholding tax on any money sent out of the country, any profits sent out of the country. So potentially, we're talking about a 50% tax in the U.S. Whereas if you had a U.S. corporation, you're going to avoid double taxation in a much more efficient manner, and you're going to be able to register for things easier. A huge problem that I'm having with my e-commerce clients, it's more people that are coming to me for me to fix their problems, is that they are selling into the U.S., but it's hard to register and pay sales taxes with a foreign company. If you have a foreign company, it's just harder to register in states to pay sales taxes. So that's kind of been the issue for them. And there's just so many reasons, like registering to hire employees, right? It's just easy. It's easier to avoid double taxation by having a local company. If you don't have a local company, I'm going to make this into a two-part question. Like, here's the second part of the question, because that first part was a mess. How can a foreign company do some business in the U.S. without paying taxes? And that's by utilizing the tax treaty. So I have a Polish client, and they send workers in for a short period of time. And because of the tax treaty between Poland and the U.S., these workers, it's not considered permanent establishment because they're in for less than 30 days doing a fixed service, and it's to deliver something. So because of the tax treaty, it's not considered permanent establishment, and therefore we don't have to file a tax. Well, we don't have to pay any taxes. We still would file protective tax return, which is reminding myself that I have to do that. File check. So I'm still going to do that for them, but that's a protective return. Here's another question. What happens if I don't file a protective 1120F? And what happens is you put yourself at risk for paying taxes on your gross sales without factoring in any expenses. And again, that's kind of a deep cut reference to the rules, but those are the rules, and that's why it's really important to file a protective foreign corporate return if you don't have, especially if you are doing some kind of business in the U.S. and you're even more so if you're relying on a treaty position. Great, another question from the chat. Oh, the Canadian-U.S. stuff is so confusing. If a Canadian works for a U.S. company on a W-2, TN visa, and starts an LLC with a U.S. family member, what are the tax implications for the Canadian part? So I'm not a Canadian tax attorney, but I will tell you what happens. When you are a U.S. tax resident paying taxes in the U.S. and you're a Canadian tax resident, and I have dual citizen clients, what happens is the LLC, you don't pay tax in Canada. You don't pay tax on the results of the LLC. You pay tax on how much you take from the LLC because the LLC is classified as a corporation. So whatever you pull from the LLC is income in Canada. However, in the U.S., you pay tax on the results of the LLC. So if the LLC makes $100,000 in the U.S., you're going to pay $15,000 of taxes. If you don't take any money out into Canada, you won't pay any taxes in Canada. However, the next year you take all the money out, but you don't make any money, then you're going to pay tax in Canada, and it's going to be more tricky to use the foreign tax credit in that instance and to figure it out between the countries. So it's definitely tricky to navigate this because when you're Canadian, you pay tax on the money you get when in reference to an LLC, but in the U.S. you pay tax on, especially if you have a U.S. trade or business, you pay tax on the results during the year. So it is definitely tricky, and I would recommend working with a professional or series of professionals on doing this. I collaborate with other Canadian accountants. That's a good question. The Canadian only has 49%. The ownership doesn't really matter. Okay. Questions. Okay, good. 2 members, question 8. Two members of an LLC. One of them resides in Portugal and the other in Italy. Because the LLC won't sell anything in the US, they won't pay taxes in the US. Okay? The Italian member needs to pay taxes on the US to show the Italian government he is paying taxes in another country. Can he fill out the 1045 or the 1040 NR and pay taxes in this context? That's a good question. I wouldn't recommend you pay taxes where you're not required because it's, again, puts you at risk for double taxation. The laws are quite particular in these other countries, especially as it relates to the LLC ownership, the membership, and the management. So I just reached out to an Italian colleague, and he did give me some inputs on this. But what I'm going to say is I would recommend that you stay subscribed to all these networks and channels and everything, because I'm going to be doing, and I've been talking about this a lot, a series of tax talks to answer all of your questions and go through interviews with experts from other countries. So these are what I'm going to go over with from my Italian counterparts, and I have a great guy I've been working with. But in short, from my understanding, if you're only there for a short period of time, it's not that much of a problem. But if you are there, then you need to find the best way to declare it and report your income from this activity, whether you're moving it to an Italian company or whether you are paying they have like some high net non-resident tax regime. It's kind of complicated. So seek local advice. Find the James Baker, the Italian James Baker, to schedule a call with that guy and ask him this question, because I can tell you about the US part with confidence. But the Italian part, I'm just speculating. Can you please share your thoughts on a C Corp, Delaware based and the ability to open and operate as a non-citizen? When is a Delaware corporation the best option? So a Delaware corporation is a great option when you are going to start a big business or go public or get investors. I still like Wyoming corporations a lot. They're a little bit cheaper, but regardless of that small cost, the Delaware corporations work fine, and they're best when you're going to have employees in the U.S. or you're going to have a U.S. trade or business. So if you're going to have an office somewhere or employees somewhere, then it's great to have a Delaware corporation. It's also great if you are going to have more risk, or you need a U.S. tax-paying business. For example, if you have I have a client who's selling into Kazakhstan, and Kazakhstan, if you show them that you're a U.S. taxpayer, will cut their tax withholdings down to 10% from 30%. So I have a lot of clients that will open a U.S. corp just to get more, to stop withholdings in other jurisdictions, and that's that's really helpful. So there's a lot of reasons you would want a C corp, but the thing is, at the end of the day, they do pay taxes. And often, if you're a small business and you're going to, for example, open up a store in Miami, you could open up a Florida corporation instead, and it might make more sense. Because if you are a Delaware corporation and you start doing business in Florida, then you have to register the business in Florida, and then you have 2 registrations to keep up with. And it can be more stuff to do and pay for and file for. It can be annoying. But those are my thoughts. I mean, it's good for some people in certain situations, and a Delaware corp is still great. Closing a Delaware, is it easier to close a company in Delaware or Wyoming? So he says closing a Delaware LLC is less easy than Wyoming. So it's easier to close a Wyoming LLC. It's even easier to close a Florida LLC. Delaware is a little bit more slow on processing the paperwork. It's a little bit more expensive in the paperwork, and I find it more confusing because you have to make corporate amendments. And I have an attorney that works for me that does all the corporate filings, because it's better to have someone who's doing it every day. And I also have a lot of references and people I work with on that. But yeah, that's what I would say. Tuna negra. Okay, so that's kind of the end of my English questions. So if you guys don't have any more questions in English, I'm going to go into my Spanish questions, and just actually, I'm going to keep on live on Instagram and on TikTok, but I'm going to switch to my Spanish YouTube channel. Make sure you guys are liking the videos. I guess that's good. I can't like my own video. TikTok's tough, man. It's tough to keep people on here. It's so entertaining. So I'm gonna go. I'll see you guys. Tu Empresa en America YouTube channel. Join me over there, and I'm gonna do a live over there. And K Jedius, if you're on a budget, this is the best way to get a free consult. Show up every Thursday and ask me your questions here. That's your best budget way. My calendar is booked up. We've been very busy, very blessed. Okay, so I'm gonna jump off on the YouTube. I'm staying on here on Instagram. So bye. Thank you for being here. And if you, I'll do a formal outro so my team can edit this up. If you want to reach out to us, you want to work with us, you can comment and we'll find you. You can schedule a free call in the descriptions of videos. You can join the Telegram group. You can join the Discord group, and we can be in touch and help you with questions. If you are just getting started and you want to learn more about how to do all this stuff, keep showing up on Thursdays around this hour and a half I have blocked off to answer questions for free on the internets on more and more platforms. So join here and I'll answer your questions because I want to help you get started so that you can start selling and start your own business and then make a ton of money and then work with me and I can help you save it and keep it because that's the whole plan. Yeah, well, Mr. Gift